The Nifty stands at a critical juncture, folks. We closed today at 24,008. But the big news, the news that could make or break this market, is the ceasefire between India and Pakistan. Can peace, however fragile, be the catalyst that sends the Nifty soaring? That's the billion-dollar question. Traders are watching closely. We're seeing heavy call writing at 24,300, 24,400, and 24,500. That tells me there's a lot of skepticism out there. People are betting against a big breakout. But there's also a lot of support at 24,000. So the market is clearly divided. This is a time for caution, but also a time for opportunity. We need to watch the data, we need to understand the geopolitical risks, and we need to be ready to act decisively. Because in this market, as in any market, the biggest rewards go to those who are prepared. Let's dig deeper into the numbers. The heavy call writing at those higher levels tells us that many big players aren't convinced this ceasefire will hold. They're betting on a pullback. But don't get too bearish just yet. We've got strong support at 24,000, that 24,000 level is crucial, it's like a line in the sand. If the Nifty breaks below that, it could trigger a wave of selling. But if it holds, it could be the launch pad for a rally. Keep your eyes on the volume too. Heavy volume on a move up would be bullish. It would mean that buyers are confident. But heavy volume on a move down would be a warning sign. It would mean that sellers are in control. Now let's talk geopolitics. The India-Pakistan conflict has been a drag on the market for years, so this ceasefire is definitely good news. But we have to be realistic. This is a region with a long history of conflict, and there are still a lot of unresolved issues. Both sides have accused each other of violating the ceasefire already. And there are reports of explosions in border cities, so the situation is still very fragile. The international community is watching closely. The US helped broker the ceasefire, and they're pushing for a lasting peace. But there's no guarantee they'll be successful, so don't let your guard down. Section 4. Charting your course, actionable trading strategies for the Nifty. So what's the play here? How do we trade the Nifty in this uncertain environment? First, stay disciplined. Don't let your emotions get the best of you. Second, follow the data. If we see a decisive move above 24,325, that's a bullish signal. It means the market is buying into the ceasefire. In that case, you could look to buy the Nifty or Nifty calls. But if we break below 24,000, that's a bearish signal. It means the ceasefire is unraveling and the market is getting spooked. In that case, you might want to sell your Nifty holdings, or even buy puts. Section 5. Staying ahead of the curve. The importance of data-driven decisions. The bottom line is this: the Nifty is at a crossroads. The ceasefire has created an opportunity, but it's also a risky time to be in the market. The key is to stay informed, stay disciplined, and be prepared to adjust your strategy as the situation evolves. Don't get caught up in the hype, don't panic, just stick to your plan, and let the data be your guide. And remember, there's always another trade.